Jesse, I'm going to say let's grab a question from our mailbag that we received this week. What'd you find?
We have a question from Hannah. So, Hannah, if you're listening, we're not going to use your last name, but we would like to answer your question here. We thought it was relevant to our conversation earlier. She asks, from a professional perspective, what are some practical ways to combat the effects of inflation in my daily life?
Well, if we want to get down to the nitty gritty, a few weeks ago we talked about what's the optimal time to buy a tank of gas.
5 o'clock in the morning.
Well, yeah, early in the day and early in the week because prices tend to change throughout the week and throughout the day for that. But I was just thinking about what we're doing in our own household,
Okay.
Jesse. We can talk about investments in just a moment, but what we're doing in our own household is just simply we're buying a little extra right now when prices are where they are. We just look at the price of a bag of chips, and because we go through a lot of potato chips in our household, that seems to be the snack of choice for my teenagers, and we're just buying a little extra and setting it aside. And same thing with staples like pasta, or even having extra packages of beef or chicken and whatever you tend to feed your family. And we just been, trying to stock up a little bit more because we know those prices are going to go up because of inflation.
Mm-hmm.
Now, a lot of times people call us up with questions about, what do I do with my investment? So there are certain things that tend to perform better. That's not to say that they'll perform in a positive way, but they tend to perform better during an inflationary type period. Well, it could be something like emerging markets or real estate or small caps or energy.
Mm-hmm.
But a lot of people think, well, I'm going to buy gold, and really that's probably not the right way to hedge against inflation. Um, there's lots of questions here about what we can do,
Are
but
you saying buying physical gold or buying a gold fund?
well, either one, they're not going to necessarily respond in the same way that people have always thought. That because there's so many commercials out there for buying gold, whether it be physical. Most of the commercials that are out there about buying physical gold, and people think that's the end all be all. And there's a lot of mystery out there. There's a lot of myths that are put out there that the world economy is going to collapse and everybody's going to use gold.
Hmm.
And people are just they're basically pushing buttons, the fear buttons, if you will, to try to get you to buy their gold. And trust me, they make a lot of money when you buy it.
I'm sure
But
they do.
there's lots of things you can do on a very practical standpoint, and just how you shop at the grocery store. Buy a little extra now because those prices are going to go up. And don't be surprised. We've already heard a few warnings about this, especially come the fall and next winter. People are forecasting, and I'm not saying that they're right, but people are forecasting that um, we're going to start seeing some shortage
Hmm.
of certain types of foods. So there's really, the inflation really is the dangerous thing about inflation, and we'll take another question here in just a moment. The dangerous thing about inflation is that it eats into your purchasing power. Now, this happens in a lot of subtle ways. But let's just say that inflation's averaging at 2%. It takes about 35 years for the real value of your money to get cut in half. But that means if I have $1,000 a month now and 2% inflation in 30 years or so, I'm only going to be able to buy about $500 worth of stuff.
Hmm.
But when you have 5% inflation, this happens a lot faster, probably around 14 years, that you'll see your purchasing power get cut in half. Last month in February, inflation was 7.9% and year over year. And I suspect when we get numbers this next week, it's going to be even higher. That means the purchasing power of the paycheck that you receive or the Social Security check that you receive is going to dwindle over time. And that is very dangerous. Our purchasing power is going to dwindle over time. And to top it off, if we're being very conservative and we just want to park our money in the bank somewhere and not invest it, well, those yields that you're receiving on those savings accounts are dramatically less than the rate of inflation. And so if you're a big saver, you get hurt the worst
Hmm.
because you're saving in things that aren't giving you a yield that are matching inflation or exceeding inflation. So you may take more risk by investing in stocks and bonds or different mutual funds, but at least you have the chance to potentially perform better than inflation. So
Mhm.
some practical things there, um, some practical things, and Hannah, and some things that you can do with your investments. Make sure that you're in the right investments and that you're not too conservative for your risk tolerance, because that can really dramatically impact your future wealth that you have there. So